Welcome to Aging with Confidence. My name is Bob Smith. I am the owner and founder of Scottsdale Financial Group. Aging with Confidence was created for people like you that are looking to purchase long-term care insurance, but you have a lot of questions. And what we have done, I think very well, is provided you a resource. We have a website, and you can reach that website at ltcedu.com. In that website, you will find an education center. And what we have done is created a number of short videos that are very simple to understand to answer any question that you have about long-term care insurance. So we are a resource to you to provide you answers to questions that you have about buying a long-term care policy. So one of the questions that I'm asked that we're going to address today is, what is the difference between an indemnity long-term care policy compared to a reimbursement long-term care policy? And you will, as a consumer, if you're in the market and you're looking at a bunch of quotes, a reimbursement contract and an indemnity contract, the benefits and structure will all look almost exactly the same. So you're going to be looking at all these quotes and you're going to be going, wow, these all look the same. But you're going to notice that there's a fairly significant difference in price. And the question is why? Well, chances are the reason why is the more expensive quotes you're looking at are indemnity policies, and the lesser expensive contracts are reimbursement contracts. So if they're providing the same benefit, what's the difference? It's pretty simple. Indemnity policies, and let's use an example. Let's say you bought an $8,000 a month benefit and you've been approved, and down the road you have a health challenge and you submit a claim to the insurance carrier and they approve you. That insurance carrier with an indemnity policy is going to pay you the approved benefit of $8,000, using our example, every month, tax-free, direct deposit to your checking account. It's that simple. So you submit the claim, you're approved, I have an $8,000 a month benefit. Every month after I've achieved my waiting period, they are going to pay me $8,000 a month tax-free to my bank account for my benefit period. It's that simple. Those plans tend to be a little more expensive. Let's talk about what a reimbursement contract looks like. Again, it's going to look exactly the same as an indemnity plan, but the difference is how they pay your benefit on a monthly basis. Here's the difference. A reimbursement contract every month is going to require of the insured that they submit receipts and bills for the expenses they've had for their long-term care challenge. So every month, every bill, every receipt, you have to submit to the carrier. The carrier then has to approve those as legitimate claims, legitimate bills for long-term care, and then they will reimburse you up to your benefit amount, which is, in our example, $8,000. So what happens if in a month I have $6,000 worth of expenses? I have to submit all that to the carrier, and what will happen is, if the carrier approves all of that, they will reimburse you $6,000. That's a little confusing. I have an $8,000 benefit. Why are you only giving me $6,000? Well, it's because you've only submitted $6,000 worth of expenses. So with a reimbursement contract, they will only reimburse you for the money that you've spent for long-term care up to the $8,000 amount of benefit. If you had an indemnity plan, that plan would have just paid you $8,000 with no bills, no receipts. Reimbursement contract, you have to submit bills, you have to submit receipts, and they will reimburse you up to the amount that you spent with a maximum benefit amount of $8,000. So using our example again, let's say that month you had $10,000 worth of expenses. The reimbursement contract, they got to review and approve those expenses, but they will send you a check if that's all been approved. Even though it was $10,000, they're going to send you a check up to the benefit amount, which is $8,000. So keep in mind, with a reimbursement contract, you have to submit bills and receipts every month for your expenses, and you're going to be reimbursed the money that you spent up to your benefit amount, which in our example is $8,000. So if you spend less, you're going to get less. If you spend more, you're going to get up to your benefit amount. So there's a big difference in how benefits paid. Indemnity plans are very simple. You're going to get what you bought, $8,000 a month tax-free. A reimbursement plan, you've got to submit bills, you got to submit receipts, they got to get approved, and you will receive back what you have spent up to the $8,000 a month benefit. So keep this in mind. It's very different. There's a bit of a hassle factor with the reimbursement plans. The indemnity plans are pretty simple, but there's a difference in cost. So when you're looking at quotes, make sure that you're comparing apples to apples. Make sure that you're comparing all reimbursement plans to compare costs. And if you're doing indemnity plans, make sure they're all indemnity plans. If there's a mix of the two, make sure you understand that you're looking at this one over here is indemnity, this one over here is a reimbursement. Oh, that's why this one's more expensive. So bottom line, it's important that you know the difference. And if you have any additional questions about reimbursement versus indemnity, give us a call. We're happy to answer any questions that you have. But really keep in mind, it's critically important. Make sure you know what you're buying. So if you have additional questions or you're interested in obtaining some quotes, reach out to us. Again, our website, ltcedu.com, or feel free to give us a call anytime, and we would be happy to help you with any question, any quote you'd like. So thank you for visiting us, and take care.